Perfect. What's up, guys? Welcome back to the channel where I teach you everything you need to know about accounting, audit, CPA lifestyle, and everything in between. If that sounds awesome to you, make sure to hit that subscribe button below, and welcome to the accounting channel. In today's video, I'm gonna walk you through how to audit accounts receivable. Most companies that sell products or services that don't get paid immediately by their customers will have some type of accounts receivable account. Accounts receivable, or AR for short, is the balance of money due to company for goods or services used by customers but not yet paid. From an audit standpoint, there are a few key critical items that you need to get comfortable with when auditing this account balance. The first thing you need to get comfortable with is that the accounts receivable subsidiary ledger, or AR aging report, ties directly to the trial balance. The second thing you need to do is you need to make sure that the AR balance your client is representing actually exists. The third thing you need to get comfortable with is you need to test the collectability of the AR your client is representing, and if there might need to be a potential allowance for doubtful accounts for the AR that might not be collected. This How to Audit AR series will be broken down in 2 separate videos. In today's video, I'm gonna go over the following: how to review the AR aging report, how to analyze the AR aging buckets. We're gonna prepare a pivot table to summarize the data in the AR report. We're also gonna perform an AR customer balance analysis. And lastly, we're gonna make selections for AR testing. If that sounds interesting to you, let's hop in the video. All right, what's up, guys? All right, today we're actually gonna review the AR aging. Believe it or not, I filmed this video last week and somehow, some way, I don't know what happened. But anyways, all right, let's get into it. So now we're gonna actually go through how to actually audit and review an AR aging and kind of the first steps that you're gonna need to do when you get an AR aging from your client and you have been tasked with auditing the AR section. So on the right hand side of the screen, and one real cool thing, hopefully by the time this video gets up, I will have already the website for the channel will be up, where essentially on the website you're going to be able to click on different links, and then for the different videos that you're watching, let's say you're auditing cash or auditing AR, you're actually going to be able to have access to this Excel file. So you can open that up, go to the website, click the link for the file, and then you can kind of follow along while I'm going through it. Hopefully that makes it a little bit easier for you to understand how to do it, how to audit it. And then, yeah, so all right, let's get into it. So first thing we're gonna do, anytime you get a client schedule, any single time you get a client schedule, you need to make sure you foot it, which means you're gonna sum the entire thing, and you're gonna make sure it agrees to whatever account balance you're testing. So for example, we are testing AR, right? So now we're gonna, first step we need to do, and you guys can see here, like zoom in a little bit. And sometimes I'll go over Excel formulas. If you catch them, hopefully my editor puts them on the screen. To zoom in, Alt WQ, tab, and then you zoom in there. All right. Okay, so first thing we're gonna do, we're gonna foot the AR aging and agree the AR aging to the lead sheet. All right, so let's go ahead and zoom out again. So we're gonna foot the AR aging. Again, we got this AR aging directly from our client. That's why on the top of the work paper, we always put PBC, and then typically, depending on how your firm likes you to document certain things, I typically like adding PBC in black, which means anything that is in black writing came directly from the client, and also BC work in color. Obviously, if your firm is whatever, Big Four, or I don't know, whatever firm you're at, right? You need to make sure that you put your firm in, BC work in color. So that represents anything you guys see in blue or red is gonna be the work that I do as the auditor. I like distinguishing between the two, but again, it's always personal preference on how your senior manager or your firm wants you to document it. All right, so now that we got this AR aging from our client, first thing we're gonna do is make sure if we foot it and it agrees to the actual balance we're testing, okay? Always, always, always do that. That is number one step. Anytime you get a schedule from a client, you're gonna foot it. So by foot it, we're gonna add subtotal 9, comma, and we're gonna add that bad boy, boom. All right, then we're gonna add that across. To add across, we're gonna do Control C, Control Shift right arrow all the way across to every single row, boom, boom, perfect. And we added that formula all across. And let's see here, the total of the AR aging is 1.459336, 1.4 million. The AR per the lead sheet, and again, guys, you always want to make sure you document where you're tying that to. So we documented here, AR per lead sheet is 1.4 million, 1463589, right? And that, always make sure you link every single, if you have a workbook in your audit file, in your audit test work, you always want to make sure if you're getting a number from somewhere else, you link it to that exact cell. And for example, I saw here that we linked it. So to link, all you got to do is hit plus and then control page up, page down to go between the tabs. So control page down, let's go to the AR lead sheet, and we're testing this account balance here. Accounts receivable, GL account 121000. We're going to click that cell, AR lead sheet D5, hit enter, boom, and it brings it in there. And always when you're looking at your own work, you can always hit control, open bracket, boom, and you go to that cell. It literally takes you, let's do that again. So if you have, let's say you link certain cells, right? You can always look at the long way and see, okay, it's coming from tab 2, AR lead sheet cell D5. And someone can go tab 2, AR cell D5 right there. It's coming from this cell, right? But since you are a honorary member of this channel and you are going to be an audit master, you're not going to do that. You're not going to do the long way. You're going to hit control, open bracket, boom. And it's going to take you directly to that cell that it's linked at. So that's a really good way to go about it. So now that we know, okay, the total per our AR lead sheet is 1463589. The difference between the AR lead sheet, which is our account balance that we've been assigned to audit, and the AR lead schedule or the AR aging is only $4,000. As we learned in our previous video from auditing cash, which you can watch, right here or right here, I'll link it somewhere. The difference, and you will only look at differences between your AR aging or schedule of an account balance and the actual account when the difference is above your trivial scope. So if we look up here, I always add my materiality, my performance materiality, and my trivial threshold in the top right hand corner to always constantly remind myself, hey, what's material to me? What can I pass on? So my passing threshold is 42,500, my trivial threshold. Any difference I get that's below that, from an audit standpoint, it's not material enough for me to care about. That's the simplest way for me to explain it. So we're gonna go ahead and move on and not do anything with this difference. We're comfortable with this difference. Why is there a $4,000 difference? To be honest with you, I don't care enough to ask the client. So we're gonna move on. If that difference was above 40,000 or our trivial threshold of 42,500, then we would ask our client, or then we would need to kick it back and say, hey, there's something wrong with this lead schedule. There's something wrong with this aging, and then we go from that. So that's the first step. Always make sure you tie out your schedules or details for any account balance that you're testing directly to that, back to that account balance on the trial balance. So that's step one. So that is done. We're going to unhighlight that. Beautiful. All right. Recalculate the aging buckets. This is one thing I typically do, especially nowadays with so much control testing you might do to get reliability of the client's their client's IT system. Sometimes maybe they're not, maybe it's a smaller job, whatever. I typically like calculating the aging buckets. Sometimes you might even have some clients that don't even do an AR aging. It's that bad, it could happen. So what I typically do is I recalculate the aging buckets. And that's a really simple way to do this is you add a formula in here. All you're going to do is you're going to add an if function. If cell A3, so we're going to go to the left, cell A3 in our formula bar, cell A3, which is the year-end date, 12/31/2022, which we're auditing, if that less the invoice date, so the difference between those two, if that amount is less than 31 days, then give me the invoice amount, which is here, H21. If not, give me 0. It's a really, see this? If the difference between these two, if it's less than 31 days, then give me the invoice amount. If it's not, then give me 0. Perfect. And then since this is, obviously that's an invoice back in October 6, 2022, that's going to be between 30, 60. It's going to be somewhere in the 60 to 90. Perfect, right there. And then so on and so forth. We add that to every single formula within this aging analysis that we're doing. So for example, here, we want invoices that are older than 30 to 60 days. So in this bucket here. So we add an if and function. So we go in here, if and we are going to add two different things that we're going to ask Excel to compare. If this cell A3, the year-end date, less the invoice date, the difference between those two, if it's greater than 30 and less than 61, this other function in here, then give me that number. If not, give me 0. So we're essentially telling Excel, if the difference between these two is greater than 30 and the difference between these two is less than 61 days or 61, then give me the amount. If not, give me 0. And then the next formula to the right, since we want 61 to 90, same formula, just different days. If it's greater than 60, less than 91, and so on and so forth. So all we're going to do to copy this formula all the way down is we're going to hit Control C on the first row, because we want to apply the same formula down to every single cell, every single row beneath the first row. Since they're all different formulas, we're going to hit Control, we're going to hit Shift, right arrow, Control C, and we're gonna hit Shift Control down to copy that same formula all the way down. We're gonna hit Control V, and boom, perfect. Look at that. And now we are looking good. Now that we calculated the aging buckets and we made sure that all the aging buckets are right, and because we calculated them ourselves, again, we went through. Now that we calculated all the aging buckets ourselves, we know that the aging buckets are correct. So we're gonna go ahead and unhighlight this. Okay, prepare aging bucket analysis. The best thing about having an AR aging is being able to review the aging buckets and see how AR is really performing and see what else you need to look into and what from an AR collectability perspective, which we're going to cover in our AR allowance testing, what type of things you need to start looking into, what type of things or what type of questions can you start formulating for your client to understand how the AR is performing. So now that we did the aging buckets, the aging bucket analysis is going to come. So the aging bucket analysis, all we're going to do is we're going to take, and let's go ahead and lock this in so we know exactly what we're looking at. And we're going to do Alt W FF. That's going to go ahead and freeze panes so we see exactly what buckets we're analyzing. So we're going to hit plus the 1 to 30 days divided by the 1459336. We're going to lock in that cell with the F4. And we're going to enter. And we want to copy this formula all the way across. Control C, hit Shift, right arrow, Control V. Boom. Now we applied that formula all the way across. And we're saying we want the 31 to 60 days divided by H46. And we're going to lock in that cell because we want to keep that formula consistent all throughout this formula. So now we understand that in our AR aging bucket analysis, and a lot of times what you're gonna need to do over AR is you're gonna need to prepare an AR analytic where you look at AR over prior year, you look at AR compared to sales, you look at AR. There's a bunch of different ways to look at AR from an analytical perspective. Happy to cover that in a separate video, but for this video, all we're really doing is to get comfortable over the AR is look at the aging buckets and see how that AR is performing and see what concentration of AR is in between a 0 to 30 days, 31 to 60 days, 61 to 90 days, 91, and so on and so forth. For this example's sake, we're gonna say that their collection terms are 0 to 30 days. So typically your client's gonna have terms where they get their customers, hey, you can pay me in 0 to 30 days, 30 to 60 days, 61 to 90. I actually had a client one time where their payment terms were literally 4 months. They had 4 months to pay off their invoices. So when you come in and you don't ask the right questions, you don't understand, well, is 31 to 60 days, is that normal or is that super past due already? So it really just depends. It's contingent upon what your client, what their payment terms are with their customers. For our example's sake in our CPA swag company, the payment terms are gonna be 0 to 30 days. So now that we drag that formula across, hit Control V, now we know, okay, in 0 to 30 days, you have almost 50% of your AR in this one bucket. In the 31 to 60 days, we have 18%, 61 to 90. I'll be honest with you guys, since now our payment terms are 0 to 30 days, I would personally, as an auditor, I would want to see more of their AR concentrated in the 0 to 30 day bucket, because if anything past that 30 days, I start getting worried about, well, are you going to collect on this AR? Do we need to have a reserve for this AR? Are you really going to collect on every single dollar past 30? Chances are they might in the 31 to 60, but once it starts getting to the 61.90 and 91 to 120 and their payment terms are 30 days, that's when you got to start asking your client, hey, are you aware that, your AR is a little old and, over 120? So let's go ahead and actually look at these 3 buckets here now that we're doing our kind of AR aging bucket analysis and see, okay, in their 61 to 90, they have $276,000 worth of invoices. In their 91 to 120, 175, and over 120 days, they have 91,000. That's insane. Okay, so if you see here, 61 to 90 is composed of 3 different invoices. And who are the customers? Let's see here. We have it locked. Let's go to the right. It's this, this, and this. So if we go to the right here, we can see, Amazon, and Costco. Okay, so sometimes depending on if you know the customer very well, they can probably tell you, hey, you know what, they're the big boys. We kind of just are at the mercy of when they pay us. They're gonna pay us, but we really just need to wait. It could happen like that, and based on, you can actually look at collection history. Let's say you can't get comfortable with it when you're doing your audit and you're reviewing your AR allowance or you're doing your AR analytic. Let's say, for example, you can't get comfortable with it. You can literally just be like, hey, well, can you show me the collection history for the past year just to give me some comfort that you're gonna be able to collect on this AR? Can happen a lot. Okay, so that's the 91, and then now let's start looking at the 91 to 120. That's made up of how many invoices? So 175,000 in that bucket, and it's made up of 2 separate invoices for 175,000. And let's control. All I did is shift spacebar to highlight the whole row, and that customer is Costco. Again, if you look at the collection history, that might be good, but I'll be honest with you, it's starting to worry me a little bit, the fact that they're 91 to 120. And just because the customers are well known and just because they have good collection history, maybe your client actually sold them defective product. Maybe they invoiced them for these 2, t-shirts or whatever that they're selling to them. And the customer, on the other hand, is saying, well, you know what? When we received this, it wasn't up to our standard that we had agreed upon, so I'm not going to pay you for these invoices. Therefore, in that instance, you might need to record an allowance for those invoices. Again, these are things that you have to start thinking about as an auditor and thinking, okay, well, how can I get comfortable that you're going to collect on this AR? So again, that's something to ask the client, that you can start formulating your questions for them when you meet with them. And then in the 120-day bucket, and let's lock this again. All WFF, let's lock that again. And in the over 120-day bucket, we have 1 invoice for $91,000. Okay, what this is telling me is that there's definitely something wrong with this. Typically, their customers pay before 120 days. Since you guys can see here, they literally have no other invoices outstanding, and they have 1. Typically, when there's 1 invoice lingering in like the ether and no one even knows about it, client isn't even aware of it anymore, that's typically a red flag for me. And I'm going to tell you right now, we will cover AR allowance testing in the second video, but I'm going to let you know right now, in our AR allowance testing, this invoice is definitely going to come up. 91,257, and let's see who it is from. All WFF to remove the freeze panes. And we're going to go to the right. We're going to shift spacebar to highlight the entire row. Again, shift spacebar. And who's this from? Todd's T-shirts. Who the heck is Todd's T-shirts? Exactly. These are things that right away I'd say, I don't know. You literally have 1 invoice from this dude and you literally have nothing else outstanding from him. Something's fishy there. Something's wrong. So again, something to ask my client and start formulating my questions when I actually get to my AR allowance testing. Okay, so now that we prepared the AR aging bucket analysis, we're done there. And now we're going to prepare a pivot table on tab 1.1 and perform procedures. Okay, so we're going to prepare a pivot table now. So what we did is, and then make sure always again, guys, top left-hand corner, the name of your company. The second row is going to be whatever you're testing, AR aging analysis. We're going to add in here AR aging by customer. And obviously your year-end date, 12/31/2022. Okay, so now what we need to do is we need to say, okay, well, we wrote the purpose, procedures, and conclusion in here. The purpose to test for net credit balances in AR. Okay, the first thing we did, BC extracted the AR aging on tab 1. Beautiful. Okay, let's go ahead and do that. So all we really did is we went here and we extracted the AR aging. So all you need to do is hit Shift Control or Shift right arrow to go all the way across, Shift Control down arrow to highlight the entire thing, and all we're going to do is we're going to hit Control C, page down to go here. Oh, and it looks like we actually took the aging bucket as well. So we're going to hit Control Shift right arrow all the way across, Control Shift down arrow to go all the way to the bottom of the data set. You're going to hit Control C, Control page down, and we're going to hit Shift, and all you're going to do is hit Alt HVV. That's going to copy paste cells. That's all that's going to do. Okay, so now we know we extracted this from tab 1. And the first thing we need to do is we need to make sure that any data set you extract from somewhere else, you need to make sure it agrees back to whatever it is that you're tying back to, right? So again, since this is an AR aging, any single time, and remember guys, you need to be a professional about this. This needs to be ingrained in you. Every time you need to make sure that any data set you're looking at, it agrees back to whatever account balance you're testing. This is an AR aging, so this needs to either agree back to the lead sheet or the original AR aging that we tied it back to at first. So it looks like what we're going to do here, again, from the first time, plus our AR aging total, and we're going to check the accuracy of this, less the AR aging on tab 1 since we extracted it from there, just to make sure we're not missing anything. We didn't, copy paste the wrong formula, because it happens so often. So the difference between those two, 0. Beautiful. Okay, now we're looking good. Now we can use this. Okay, so now we're going to do here. Foot the AR aging, that was step 1. Foot the AR aging and agree to the AR aging to the lead sheet on tab 1. Beautiful, we just did that. Again, remember guys, anytime you have an account balance detail, always tie it back to the trial balance or the lead sheet. Step 1, always. Prepare a pivot table. Okay, we're gonna prepare a pivot table very quickly here. To prepare a pivot table, all you need to do is hit Shift right arrow, Shift Control down arrow, Alt NVT, and that's the shortcut to prepare a pivot table. Okay, then this is gonna come up here. Okay, Alt NVT to prepare a pivot table, and you're saying, hey, you're telling to select the table or range. We already selected it, right? We highlighted it when we did our pivot table. We selected the data set we want to make a pivot table. We're gonna put it in this existing worksheet. You know what, but before we do that, we're gonna make some space for it, because just from my experience, I know it's gonna tell me something. So we're gonna go ahead and make some space for the pivot table in here. All right, again, let's do it again. Shift right arrow, Shift Control down arrow, and this is essentially highlighting the data set we want to analyze. Alt NVT, that's the pivot table formula. Okay, now we're gonna say, we already highlighted the cell we want to put in a pivot table. We're gonna put it in this existing worksheet, and the location, we're gonna want it right here, right next to it. Okay, beautiful, look at that. We're trying to do an AR aging by customer balance total. So what we want from a pivot table is we wanna see the customers and the total balance per each customer. So easy, we're gonna put this customer. All right, we're gonna want the invoice amount for each one. Right now, we want the sum of all the invoices per each customer. That's exactly what we want in our pivot table. So now that we have that, and we now have our pivot table. Obviously, it's still in pivot table format, so all we need to do is hit Shift Control right arrow, Shift Control down arrow, Control C, Alt HVV, copy paste visible cells, and that's it. Now we have customer. Now we're gonna edit it. Customer, and then if you see to the left of it, we already have it how I want it. And customer concentration. Boom. So we're gonna go ahead and delete that. I just wanted to walk you through how to do it, but essentially you guys can see here, the grand total is 1459, and I already did it, already performed the pivot table to the right of it. So we're gonna go ahead and delete that. All right, now that we have our pivot table here, why you need to do that is sometimes when you have a pivot table, it doesn't allow you to edit the data in a pivot table format. So I always just, once I make my pivot table and I know it is what I need to essentially manipulate the data like I want to, as I want freely, I always just copy paste visible cells. So now that we have a pivot table here, all we want to know is the total the customers and their total AR balance to get a concentration from each one. So as you guys can see here, Chris Brown LLC, he owes us a lot of money because he's 31% of our AR. Think about that for a second. 30% of our AR balance is from one customer, which happens to be Chris Brown LLC. I'm sure he has the money to pay us back, but who knows? Okay, Target is at 16%, Costco's at 16%, Amazon 15%, Todd's T-shirts. Remember, Todd's T-shirts comes up again, that 91,000. That's 6% of our AR, and it's super old. Again, things to start thinking about. Drake Aubrey, he owes 6%, 84,000. Walmart 6%, and Bryan Carreto CPA, that dang guy, he's swagging too. He has too much swag, but he owes us 54,000 at 4% concentration of our total AR. So that's exactly what it is. So now that we've prepared a pivot table, we're done with that. Customer concentration percentage, we finished that up as well. And also too, guys, depending on there is times when you are going to have to make certain disclosures on the financial statements. Again, this is going to be a lot more for your manager, senior, whoever that's preparing the financials or going through it, or even your clients are going to need that information. This is really good for you to test and make sure that you can tie back whatever disclosures you make on financial statements back to your actual work papers. So again, now that we did our customer concentrations, we know how much each customer makes up of our total AR balance. So we did that. And last thing we need to do, we need to check for credit balances in AR. Okay. So typically what ends up happening sometimes, and it does happen a lot. In our example, we don't have it, but what will end up happening a lot of the times is that sometimes your clients get payments from their customers and they don't apply them to the AR, or they actually have credit balances in their AR. The only time, and I cannot repeat this, the only time you book an adjustment or a reclass to go from AR to AP is when the total net credit balance by customer is a credit balance in AR. And let me kind of illustrate what that would mean. Let's say, for example, I'm going to change this up real quick. Let's say Costco, for example, had a credit balance in AR at the customer level, when you net all their invoices, if the net balance is a credit balance in AR, and remember from our debit and credits videos, which I will post right here, just to make sure you got this, the normal balance of AR is a debit balance. If there's a net credit balance in a customer account as a credit balance, that amount is wrong and it needs to be reclassed from AR to AP. And the entry for this would be very, very simple. All you would need to do, let's say the total net balance of a customer in AR, if it's a credit, again, you have to take all their invoices. There might be credits and debits. If the net balance is a credit, you need to perform a reclass. If it's above your trivial threshold, again, a trivial threshold, get used to seeing that. Remember, our trivial threshold from our beginning is 42,500. If we go back to the AR per customer, if we go here, we understand that now our we have a credit balance in Costco for 237,000. Maybe they overpaid us, maybe, who knows? But the bottom line is you cannot have a net balance of credits per customer that's over your trivial threshold in AR, because essentially it's reducing your AR. So you need to put it back in AP. So what we need to do this, we would book a debit to AR because we need to increase AR because there's a credit bringing it down, right? So we would book here, we do this debit, and we would put it in AP. So you're essentially increasing your AR by debiting it because essentially you're removing a credit, which is bringing it down, and then you're putting that in AP. So essentially what's going on is you're taking it out of AR and putting it in AP. So now you don't have any net credit balances per customer that are over your trivial threshold in AR. This is a big check that you always need to do whenever you're performing your testing over AR. Okay, so now BC forwarded the customer concentration in AR balance to revenue testing section for financial statement disclosure purposes. Again, sometimes, for example, you will need to have a disclosure for certain customer concentrations. Certain concentrations require, and obviously you would have to run that by your senior as far as if there's any disclosure requirements that you need to do. So again, that's more for a financial statement purpose analysis. And now that we pretty much are completed with our AR by customer analysis, we're going to go back to tab 1. So now that we completed step 4 here, prepare pivot table on tab 1.1, we're going to do our last step for this video, which is make selections. So what ends up happening now that you essentially got comfortable with the AR aging, you agree that it ties, you looked at the aging buckets, you did an AR by customer analysis to look for any concentrations. We kind of talked to our client about certain concentrations they have, certain old AR that we're going to start formulating questions when we do our AR allowance testing. Now you need to get comfortable that the AR actually exists, that this amount is accurate, exists, and there's no cutoff issues with this AR. So the way to do that is you're going to select samples from this detail. Okay, I kind of did them randomly, but depending on what firm you're at, sometimes you might need to use software that actually makes the selections for you, like Idea and certain. There's so many softwares that so many different firms use to make selections for them. Some firms might even use Excel. Who knows? But the bottom line is that when you're making selections, and I can make a whole separate video on the selection making process, but it's typically pretty straightforward because your firm in your audit file, you're going to have like a sampling form or a sampling sheet that you literally plug in your numbers that says, this is my materiality, this is my account balance, is this account a significant risk, did the audit team deem it a significant risk, and so on and so forth. There's a bunch of different questions the form will ask you. And thank God now, we really don't need to do this by hand anymore. The sampling form will literally tell you, hey, based on the account balance being, X dollars and your materiality being this much and there being a significant risk with this account balance, you need to test 20 samples. Or since there's no significant risk and the account balance isn't that material, you only need to test 4 or 5. So again, the samples that you need to make are all dictated upon your materiality, the account balance, your risk factors for the account balance you're testing. So in our example's sake, we had 4 sample selections we need to make. Typically for AR, you would probably need to make a lot more than this because, if you're dealing with a manufacturing company or a distributor, typically they have a lot of AR on their balance sheet. So that's pretty much going to be a higher risk area. I'm not saying it's a significant risk account, but it's more material, so you might need to test 20, 30, 40 samples. Who knows? But obviously, for example's sake, we only needed to select 4. So now that we have these 4 selections, we're gonna put them on our AR testing sheet. So these 4 here, and we always make sure everything ticks and ties out. So the total invoices we're testing, you guys can see here, 604,736, and that is in our AR testing. If we, beautiful, 604,736. And now that we have our AR testing set up, and also once you have your AR selections ready to go, typically, depending on how your firm does it, some firms you literally have like software where you put the selections on some, it's like a program where you connect with your clients and you're able to send them selections through a program. Or maybe this is something that you do via email. Depending on how you send client emails, it is really contingent upon what firm you're at. But if you need help on how to send a client an email or how to send certain requests, I'm going to go ahead and link a video right here that I made that'll show you exactly how to go through that step process. But for now, this is step 1, and this is the first step and of 2 of how to test AR and how to get comfortable with it. On our second video, we'll actually go into how to test AR from a detailed testing perspective from our selections that we made, how to send an AR confirmation, and lastly, we're gonna get comfortable with the AR allowance testing. Congratulations, guys. You officially completed part 1 of this 2-part series of how to audit AR. If you found value in this video, please make sure to smash the like button below for the YouTube algorithm. Until next time, work hard, dress well, peace.